Hello, warriors, traders, viewers from investing.com. Hi, Alexander, Ren, Kevin. Everyone doing okay? Here we are on Thursday. With the thought, since we do have a lot of viewers from investing.com, I'd start off and show the Dow chart. And you look at the daily, we attempted to fill the island. This is the island. This is Gilligan, the skipper, Marianne, and the professor, all stuck on Gilligan's Island right here. They're marooned on this island. So as long as we don't fill this gap here, it's a pretty rare formation, and this is not showing today's action where the S&P is down pretty hard. This is the daily, but you can tell we're moving sideways here. I thought that we might be able to get one more pop up and challenge this high. That still could happen next week, but you have to be alert that at any time we could fail. Dollar's getting a pretty good bid, especially against cable. A short recommended last week at 28, and our chart of the day showed downside being the path of least resistance. So looks like we're going to get another wave to the downside. Euro pound still working because the euro is strong. Just a little something that I'd like to share with you that I learned from people who use Bollinger Bands. Actually saw John Bollinger talk about this. When the bands compress like this, normally the first move out of these bands is the false breakout of these bands. So if we're going to come out to the downside, the next time back inside the bands would be a signal for a buy. But you can't argue with what the dollar's done this week. It held right where it had to after last week's reversal week. Almost looks like 97.24 that we're going to be heading back up towards this breakdown, which you can see on the daily pretty well. You know, you have this flat rectangle comes in up around 98. So stronger dollar risk off. So we'll see if the S&Ps can fight it for one more high next week. I believe this is one of the biggest option expirations. I think it's quadruple witch. I'm not sure if it's today or tomorrow that we expire. Okay. And since we are on investing.com, I thought we'd look at MAGA, and MAGA is, you know, not Make America Great Again. It's Microsoft. Okay. So Microsoft had made a new high after the March sell-off, but RSI is not confirming on the daily, okay, at this high. And then you look at Apple, and Apple at new highs is not confirming here on the daily. I'd be pretty careful with it, and it's really glaring when you drill down to lower time frames. So maybe it moves up towards 320 or so. So that's the MA, and then Google. Really hasn't, it's been diverging all the way back since April. You know, we could squeak out another high here too as well. But as you can see the message, and here's the Amazon, that at new highs we won't confirm here. So these are really the high concentrated stocks that are making the NASDAQ outperform. And you probably have to say that Apple has been the strength of MAGA. And as you can tell at new highs, there's your daily time frame diverging. Let's even look at the weekly. Yeah, look at this glaring divergence on the weekly. So it's Thursday, it's done nothing wrong. Maybe we'll get follow through into early next week, but multiple time frames of divergences. Look how glaring it is at this new high. So just some warnings. I'm not saying short it, but I do think it'd be a good idea. Say you were long, 1,000 shares. There'd be nothing wrong with taking Apple off at 350, 360, because a little correction. We could have something like this. You could take it down to 320. So you're talking 10%. And just wanted to let everyone know what's led the market. Although we had value come out and some of the depressed stocks and even bankrupt stocks doing pretty well over the last couple of weeks. When the quality is not confirming price with momentum, that's a warning sign. So that's mainly what I wanted to cover today is some of the strength in the market is starting to not confirm new price highs. And if the dollar's going to rip, then we have a problem here in Houston. So wondering what Blake is thinking. I know that there was a lot of people. Okay, so here we go. We're coming out of the Boley band. This is a 2-hour TF. So keep an eye on it and see if this theory works. It's coming out of here. So if we get back inside the band, this would be the fake out. And then if we get back above, say, 1270, 1265, this may be the true breakout. So just something for you to experiment with, because you're going to see if you use bands times where price compresses, and then you'll know not to if this works out, not to really trust breakouts out of the band. So a little technique, a little analysis here for everyone. Hope everyone's enjoying Face over there at investing.com, and I'm going to bring Blake on now and see what he's thinking going into today's session. Good morning, Blake Morrow.
Hey, good morning, Coach. How are you?
Good. How are you doing, buddy?
Good. Just watching the consolidation, but we're seeing a little bit of just an inkling of some risk off coming into the markets, and
Yeah.
I actually wanted to talk. I was trying to figure out something to discuss today, just because if you look at currencies are very like here's the euro dollar. You can see we're very much range bound, but then all of a sudden, about 10-15 minutes before this webinar started, we started to see a sell-off in like the S&P, and we got the Russell near the overnight lows. The Dow's coming off quite a bit. Even Nasdaq's coming off a little bit. So I'm gonna actually turn my attention to what's happening with the broader markets really quick before I talk about gold, because we were just sitting in there in the chat room and discussing, like, why is the gold's gold market's not really moving, or it's not really moving, or what moves the gold market. And I'm like, I think there's something bigger in the works, and I wanted to talk about it. But here's the S&P, and I'm in the camp right now that as long as the S&P stays below this trend line here, which comes in around 3130, the risk is lower. Now, does that mean you need to chase the market lower right now after the S&P has just dropped 20 handles? Probably not. I don't know if you really want to be long either. I'd probably just be selling rallies now, back up towards 3130 if you can get it, or 3120 maybe. All right, so that's kind of what I'm looking at with the S&P. The Nasdaq also making lower highs on an hourly basis, so that's naturally going to lead lower as long as we continue to make these lower highs. I think the Nasdaq will roll over here too, and same with the Dow. The Dow's also struggling. The last bounce overnight didn't even last us to the 50% retracement. So these indices look at risk for lower prices, but like I said, I don't know if you necessarily want to chase them down here, just because you guys know North American traders, they come in and they tend to step in and just start buying stuff. So I'd probably wait till the open to see what happens here. Now, as far as currencies go, this is one of the reasons why I've been very sidelined, and you know, it's like you look at these currencies, like here's the Aussie, and we are consolidating. And do I think a breakout's coming? Yeah, of course, a breakout is coming. We just have to wait for it. And 68.35 here is the breakdown point, and the breakout point is 69.25 roughly. And you just have to wait for one of these two levels to break. And when it does, it should give us a decent move. Now, because stocks are moving lower, that would lend to a breakdown in the Aussie dollar if equities continue to sell off. That's what I would be thinking. That doesn't mean it's going to happen. I'm just saying that that's what I would think would happen, though, is if equities start rolling over, then the Aussie is going to eventually break down. But I think there's a lot of downside in the Aussie from current levels, so I'd rather see it break down than break out to the upside, because I think to the upside, it's you know, we're going to struggle as we head up here towards 70 cents. But I think if we start breaking down, we have an opportunity to, you know, make a move past 67 cents, closer to 65, 66 cents. So I think there's a lot more opportunity on the downside with the Aussie. And you know, with the euro, we're still in this what I think is a pennant. We're at the 38% retracement, which is at the 112.10 level. It's hard for me to get really bearish down here because we bounced aggressively yesterday. I say aggressively, you know, you can read my analysis on ForexAnalytix. Yesterday, I was like, the euro dollar is finding support at the 38% retracement once again at the 112.11 level, which could also lead us back to 112.50 level if we hold here. And what did we do? This is yesterday. We were here. We bounced back to the 112.50, well, actually 112.60, and then we rolled back over again. So it's not, I'm not like thinking, oh, wow, look, it's going to be some aggressive bullish move from here. But I do think it's support. Now, one of the reasons why I still believe that we could be supported here is because we have the EU conference that is tomorrow morning. And although all the ideas have been poo-pooed thus far on, you know, is there going to be some sort of, you know, stronger talk about a coalition of the European, or more, you know, significant European Union, if you will, from a fiscal standpoint? It doesn't seem like it as of right now. You still have the, what do they call it? I wanted to say that I know what it is. It's the frugal four. I almost called them the abstinence four. The frugal four, which the four European countries that are really kind of opposing more of a fiscal union. But anyway, what I wanted to say is there is the European Council meeting tomorrow. So, you know, maybe there is some positive talks. And if there are, that would lead to an upside break in the euro, I would think. But I still, and I've been saying this all week, I still believe that key support for the euro dollar is at 111.50. I'm kind of hoping that tomorrow or tonight, you know, we dip down towards 111.50. We look like we're going to break down, you know, through this pennant support. And then I want to be long down here for a bounce. That's what I'm hoping for. Does that mean that that's going to happen? No, but I've been telling you guys that all week, is because I'm really hoping it does happen to give us an opportunity to be on the long side down there. I've been wanting to be long at 111.50 for the last couple of weeks. It's just, you know, waiting for that opportunity. You know, one of the currencies you got to keep an eye on, this dollar Mexican peso. Played this to the long side this morning for a short period of time, just because there was some risk off. But yeah, keep an eye on the dollar Mex. The dollar Mex is, you know, it's holding up well here. Okay, it's holding up well, and this is, you know, an indication for us that there might be some risk off, right? As long as we continue to hold this 2220 level, the risk remains for an upside move. So I think 2205 is really what I'm looking at. But you'll notice that we broke, and this is let's go to an hourly. You can kind of see it here. We broke the downtrend line. We've just been back testing the trend line here before the rally. So now we are, we're popping a little higher, and it's moving higher with risk. It's moving higher with risk aversion, and that's typical of this of this particular currency. So let's talk a little bit about gold, because I wanted to discuss gold at a little bit more length this morning. It looks like we're trying to break down here, so just watch gold. It could break down a little bit. Let's see this trend line. We're basically on it right now. But you got to watch gold. I still think that gold is in a consolidation phase. We might break down here in gold near term, but maybe test some support down here at below 1700. But overall, I'm still bullish gold. I know that right now it's under a little bit of pressure at this moment, but overall I'm bullish. And the reason why I'm bullish on gold longer term is because we continue to flood this market full of liquidity. And I say we, it's really the Fed and central banks, which, gold is one of those assets that's flocked to because there's limited amounts of it. And so in a world awash of, massive amounts of liquidity, gold is an asset that's going to be favorable and it's going to be sought after. And if you go back to, let's go back to the financial crisis of like 2007, 2008. And here, this is spot gold. Okay. You can see gold at the, this is the financial crisis, post-financial crisis, 2008, 2009, all the way to 2011. Gold ripped higher, right? And you're like, well, what was happening during that period of time where gold was ripping higher? Do you know what was happening? Dale, do you know what was happening? Huh?
Fed easing.
Fed easing, recovery, right?
Yeah.
After a financial crisis.
Yeah. Zero rates.
Zero rates. The rest of the world was moving to ZIRP. Now the whole world's basically at ZIRP, for argument's sake. There's massive liquidity awash in the market. And frankly, I think gold's going to be one of those assets that just starts to rip at some point. We're going to be sitting here one day and it's just going to rip higher. And notice it, and I'm going to, just take a look at it technically. Okay. Here we are. Look at the rally. Okay. There's something that can be said about this too. Whenever you get an asset, and I made this argument, by the way, this isn't the first day I've made this argument. I made the argument here. I made the argument here, and it's the same argument. When you have an asset that goes up and then it consolidates and it doesn't go down, the risk is for a continued rally. And that's just plain and simple. All right. And it's the same thing with an asset that goes down that just doesn't bounce. The path of least resistance continues to be lower. When you take a asset class like gold and it's rallied so aggressively and you've got so many people trying to stand in the way of gold, there's like, the positioning is so, it's too many bulls and blah, 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 blah. And, argument. the fact of the matter, gold's not coming down. And then you take the relative strength. We are now, back to mid-range. You know what happens when relative strength goes to mid-range? It provides us an opportunity, once again. Oops, shoot, I didn't want to do that. This provides us an opportunity to rally again in relative strength, and then you get a resumption of trend. So yeah, I mean, you guys can try to short gold if you want. I mean, my opinion is while we're above 16 whatever this is, 70, it's and then good luck. The asset class does not go down. I mean, and maybe it will. Maybe there's a reason why it does at some point. But man, I'll tell you.
Can I construe that you're constructive gold here?
Yeah, I am. Why would I want to be a seller?
Well, I know.
There's guys. I sorry to interrupt.
Oh no! Here comes.
I personally think.
Gold bull. And by the way,
no.
He's been bullish precious metals for since I've known him. So go ahead. You've been right. So go ahead.
I think gold goes down a lot if we have an equity crash, just like it did in March. I think we could go back down to 1,500, but we have to have
liquidations.
an equity crash.
You guys are a bunch of jackasses. I'm not listening to either one of you anymore. I'm only listening to Dale from here on out.
Joe just wrote Stelio shit.
Don't do that, man.
No, seriously though, I mean, I hear what you're saying because it's kind of moving along with risk assets. But at the same time, the argument that I've got here is, if you've been bearish gold, you've been wrong. But plain and simple. You can't argue that.
Pinging Henrik.
You could say, oh no, I was bearish. I was bearish here, and then I turned bullish here, and I'm gonna tell you to go shove it up your own ass. But in all actuality, look at the trend in gold, and if you've been bearish gold, you're wrong. And it's not saying that it won't turn lower. It could, sure. And we've noticed that maybe in recent weeks we've seen a gold move in tandem with risk assets a little bit intraday. Stocks come down, gold comes down a little bit, but then it just pops right back up again. So, but then again, so does stocks. So maybe you're right, Stelios, Steve. Maybe gold does come down and it sells off to 1,500 and gives us all a great opportunity to be on the long side.
The only situations under which gold can be really bid while stocks are crashing is if the reason that the stocks are crashing has to do with fears that the financial system is in jeopardy. That's the situation under which you will find gold getting bid at the same time that stocks are really plunging, because otherwise what we've seen in the past is that a lot of people that want to cover potential margin calls just liquidate positions in gold to save their stock portfolio from being liquidated.
Yeah, and I've had this conversation over the last, but I've been broadcasting almost 15 years maybe with with previous employers when I was chief strategist all the way up until Ally Financial. And the thing is that when you talk about gold going up with the dollar, it's usually a pretty good sign that equities are under pressure. And if you see equities really buckling under pressure and you see both gold and the dollar rallying, then you usually it's a pretty good indication that equities or risk aversion's really picking up, and it's picking up in a severe way.
I didn't want to interrupt you before, Blake, but one of the reasons why we saw that extended rally almost a decade ago was because at the same time, after the US had, with whatever means they used even back then, recovered from that recession, is with a little bit of a lag, 2 years of lag, we had huge fears that the Eurozone might have broken down. If you remember, there was like a big 2010, 2011, were years that were very, very tough for the Eurozone. And that helped gold stay very elevated, because in the US things had cooled down, but there was a lot of worry that Europe might not survive that crisis.
Yeah. I remember that too. And look at Greece; it's still there. All right. So anyway, guys, well, I just wanted to turn a little bit of conversation to gold, and really the reason why is out of boredom, because when you have to stare at the FX market and you have to stare at the Aussie that looks like this, there's just not a lot to do right at this moment.
They trade SPX, buddy.
Well, yeah, I mean,
it's like Space Mountain.
Yeah, Space Mountain. That's funny. That I'll tell you what, and this has nothing to do with anything but Space Mountain. So last summer, I went to Disney with my wife, 2 kids, our neighbors, and their son, and one of the rides that wasn't getting ridden quite a bit was Space Mountain. We could really go on it unlimited. And after riding that ride probably, I don't know, 20 times over the course of like 3 days. Yeah, I think I rode it probably because all the kids wanted to do it. I realized how it was like my favorite ride back in the late 70s, early 80s as a kid. It was so much fun. And it's still fun to this day. I still have a great time.
I hurt my back on it.
Oh, really?
Yeah, my lower back got tweaked on.
That's because you're a wussy.
Yeah, I am. I am.
Anyway, all right, guys. I'm going to let you go. For those of you that are supporting us through ForexAnalytix, we appreciate that. Remember, visit our webinar sponsor, Forest Park FX. They will help you with the reimbursement program if you want to be part of the ForexAnalytix family, or if you want to get cash back for your trading if you're in the US or Canada. So, and we've been working with them for years. And they're really great at helping you find a broker to work with. Or you might even have a broker that you qualify for that you didn't even know that you're using. So make sure you reach out to them. So thanks for all the support, everybody. I'll see you on the daily roundup webinar in approximately 4 hours, guys. By the way, we do have data coming out. We have Philly Fed. We have Canadian
wholesale trade.
Well, that too, and then we have jobless
claims were today. Jobless claims.
Yeah, we have U.S. jobless claims, but we also have Canadian
Crown Royal sales.
Cannabis sales.
ADP.
Crown Royal.
It's new. We have Crown Royal maple syrup sales. Yes, exactly. But all ADP, and I don't know when ADP started putting out data for Canada on Thursdays. But anyway, keep an eye on it. I'll see you guys later.
Good luck. Good luck, Greg.
Thanks, guys.
Thank you. And before we get to the data, can I just say I completely agree with what Blake said about gold. I'm just saying the scenario where it's going to drop is if equities get smashed. But for me, fundamentally, there is literally zero reason for precious metals to drop. At least not in the medium term. Short term, they can do whatever they want. So let's have a look. Okay, we have about a minute left to go for the data.
So expectations are for minus 23 in Philly Fed, 1.3 million initial jobless claims expected. Continued jobless claims expected to be just below 20 million. So these are the data now having to do with wholesale trade in Canada. I doubt it's going to affect much, but it is expected to be seriously negative at minus 12.6.
And the ADP number for Canada has been around for about a year, from what I remember. So it's not a new.
Doesn't really matter anyhow. All the Canadian data leak ahead of time.
Speaking of leaks, I think we're going to talk about the pound in a bit, but let's see the data first, and we'll go from there.
Yeah, any second now. Let's see. There we go. There we go.
Okay.
Worse initial
51.5
jobless
million.
claims at 1.5 million. Quite worse, 700,000 more continued jobless claims. So it's 20.5 million. Canadian wholesale trade a
Awful.
lot worse than expected at minus 21.6. And Stelio, I still don't see Philly Fed.
I don't see it either, so it must be late. Doesn't matter.
It is probably late, yeah, because I don't see it on Twitter as well. So
Yeah.
data flash is always very prompt.
Yeah.
But
Okay.
I double check to be sure.
Well, we'll see when that comes out. We'll see the number. A few things to talk about today, data-wise. First of all, I'll take them by order that they came. New Zealand GDP, worse than expected, minus 1.6% quarter on quarter. It was expected at -1. And not a complete disaster, but worse than expected.
Philly Fed plus 27.5 versus minus 21.4. So Philly Fed.
Is that a sign problem again? Is it plus instead of minus or minus instead of plus? Let's see.
No idea. It might not, actually.
Let's see. Okay. Well, that's a big beat, that's for sure.
Yeah, that's a big bit.
Okay. So carrying on with the data, we had employment out of Australia, minus employment change, so minus 227,000 jobs versus minus 125,000 expected. So worse than expected, still less than last month's number, which was nearly 600,000. So data is coming in worse than expected in Australia and New Zealand. We had the Swiss National Bank interest rate decision. They kept rates unchanged at -0.75%. That was expected. But they did say that they are open to taking it more negative if needed, which makes me laugh every time I hear that.
Minus 0.7 has helped so much. So if only they take it a little bit lower, it's gonna do wonders.
Yes. So that was a Swiss National Bank. Interestingly, Norges Bank, so Norway, they also kept rates at 0, unchanged. But they did note that they were slightly less dovish than, definitely less dovish than expected. They said that activity is picking up faster than expected. Unemployment is falling is falling more than anticipated, and oil prices are rising. So these are all positive for the Norwegian economy.
For the Norwegian economy, yes.
Yes, the kroner actually was doing well this morning, but then when stocks turned lower, naturally, with being a risk proxy, it's now kind of flat on the day.
My main case scenario is this one for the kroner Stelio. I still hold my short positions, by the way. I'm deep in the money. And I'm going to be adding, if we get another leg higher in USD NOK, for example, towards like 10, 15, I'm going to be adding both to USD NOK and Euro NOK.
I agree with you. I closed my USD NOK completely. It was small, but my larger position, which is Euro NOK, I still have about half of it. I closed half of it. And I'm waiting for that bounce exactly like you're showing to add more.
Here is Euro NOK, by the way, which look from where it got rejected.
Yes.
Retested this previous support resistance zone and created that beautiful
200 DMA, right? It bounced
50. That's the 50.
No,
and the 200 DMA was the one that so now we're between the 50 and the 200 DMAs, but I love the way it got rejected. I mean, by creating that beautiful shooting star a few days ago at 11. So I still think I think there is a very high chance that in both those pairs, Euro NOK and USD NOK, I think there is a high chance we've seen the highs with that blow off final leg higher that we had.
Yeah, amazing though how technicals work, right? The 200 DMA was perfect support. 50 perfect resistance. It's amazing. So that was Norges Bank, and then we had the Bank of England, and they were never going to change rates. They kept them at 0.1%. And the question was, what do they do with QE? And I don't know if Blake mentioned that. I missed the first 5 minutes of the webinar, but they increased it by 100 billion, which was the low side of what was expected. And the pound rallied on the back of that. But they announced that there's going to be a phone call with press, which I think has already happened. And the embargo until they can announce it is in about 1 hour's time. And guess what? The pound is losing ground quite a bit. So
no way. You don't think it got leaked?
No, never.
Those things don't happen.
In the UK, especially, never. Notorious. I mean,
Yeah.
I really don't understand how regulators.
I know that you actually have personal experience from that.
Yes.
Let's not go into details.
Yeah, but yeah, I just don't get it how they can let these things happen. But anyway, chances are that this transcript of the call, whatever it is, when it gets released, is probably going to be dovish. Let's see what they're going to do. They did not mention negative rates, which is important because a lot of people were saying that they're going to mention them and make a case for them. They didn't. So although the interest rate decision and the associated text, etc., was not dovish, the pound is dropping today. So we're just going to have to wait for another hour or so to see what happens. And
Dominic, are the numbers you're writing correct?
2.4 million.
From
Blake wrote that.
So then it's from Bloomberg. If the source is Blake on the chat room, then it's from Bloomberg. Oh my God. ADP Canada revises April job loss to 2.4 million from 226.7 thousand.
That can't be right. That
Oh
can't
my!
be. 2.4
I mean,
million.
that's 11. Like, what is it? Like more than 10 times. Yeah, that's.
Wait a second. Population of Canada is like 40 million. That can't
Yeah, that's
be right.
if that number is correct, it's unbelievable.
Yeah. Well, there you go. What else to say?
Let's have a look at USD CAD.
Yes.
Out of curiosity. Oh, it's actually not doing anything, more or less. Speaking of the USD CAD, I also believe that there is another, similarly, I mean, we more or less got the low area quite correctly. I think this is a consolidation that's going to produce, let's now delete all that. I think this is a consolidation that's going to produce at least, at the very least, one more leg higher towards that area. Go ahead, Stelio. What else did we have?
That was it, actually. So, as always, we keep an eye on equities. I'm not short. I was short a couple of weeks ago. What was it? 30.50, 31.15 in S&P. I closed that for about 20 points gain. Could have been a lot more, but we started squeezing. I am looking for opportunities to short, but I'm not shorting it today. So
I mean, the stock indices are like a beach ball at the moment. I mean, every time we get an overnight sell-off, which usually is the case, it gets beat up immediately afterwards. So, the more we consolidate in this is the S&P. So, I always use this as the barometer for risk. I mean, it's the most broad of the indices. So, the more we consolidate in this area, I think the more the chances that we're going to straight go down from here, break down from this support and move lower decreases. And the higher the probability that we're going to get at least one more leg higher before we get a deeper correction. So,
I agree.
The jury is still out there, but the way I see weakness being bought immediately, makes me think that it's very likely that this is going to happen first.
I would love to see a new all-time high in S&P, just as a blow-off top. Take new longs in, but that's some way away. So maybe just a new high. Actually, a friend Simon is saying
just a couple of companies need to go bankrupt, and we'll see that.
Yeah, our friend Simon is saying, who's in the UK, he's saying everyone I know is talking about redundancies coming when the furlough system asks companies to pay. So layoffs, July, September.
That's a given for the US as well, and that is why I believe. Thank you, Simon. That is why I believe that, and I said it since the beginning, especially with the US elections coming in a few months, in like 5 months from now, I strongly believe that they're going to do whatever they can to, in essence, extend all these unemployment programs, the PPP and whatever else, because it is a given, in my opinion, that once these programs are over, it's going to be more than obvious, even to the most naive person, that the damage to the economy is not going to be undone just because everything opened up again. And since we know that we have the U.S. elections, and we know that and that's not because of Trump. I mean, this is not a point against Trump, because unfortunately, having to do with that, my opinion of politicians is exactly the same. I mean, all of them are going to put as a first priority getting re-elected, and as a second priority, what they should do, what is the best thing for the economy, what is the best thing for citizens, etc. So that is what I'm expecting. I'm expecting some kind of an extension to all these programs, because if they don't do it, I think it's going to be more than obvious that the damage is, I'm not going to say permanent, but I'm going to say it's lasting.
Kind of like buy the rumor, sell the fact, and the rumor is the opening. And then once we have the reopening pretty much completed, that's when the letdown comes in. Okay, we're open, and this is what we've got.
Yeah, initially, once you reopen, you start getting data that fuel naive expectations, because obviously the data you're getting once you start opening, and now you have to compare them with the months that the economy was almost completely shut down. They look magnificent, right? Yeah. But you get the initial data that in comparison to the previous month they look magnificent. But then once a few months start passing by, and you start plotting the trend, and you realize that, yeah, okay, the recovery of course was fast, because we had to recover from a situation which was unprecedented, having a completely locked down economy. But then you plot the data and you realize that, yeah, okay, all that is good, the recovery is fast, but the pace and the trajectory is such that it's more than obvious that we're not going back to where we were. And then the market will have to price in that all the rainbows and unicorns expectations, that you can flip a switch and everything go back to January, beginning of February, and erase completely whatever happened in between, is a fiction.
Could I share my screen for just a second? Something I was talking about earlier.
Go ahead.
Okay. You have to stop sharing.
There you go, Dale.
All right, thanks.
You can't just take the screen from him. Come on, just take it.
All right, everyone see the euro? Can you see it, Steve?
Mm-hmm.
So this is what I was talking about with Boley bands when they compress, that the first move out could be the fake out, and see how it's come out of this little tight compressed band, and now we're back inside of it. We get back above it, that's your real breakout. So, I'm just saying, this is not me. This is what I, was at something where Bollinger was speaking, and he was talking about when bands compress, that the first move out of them is usually something you fade. So just wanted to show that we got the first move out of it. Now let's see what happens the rest of the session. Take it away, bro.
Thank you, Dale. Okay, so nothing more to say about indices. Obviously, whatever the S&P is going to do, more or less the rest of the indices are going to follow. Some of them, a little bit stronger, some of them a little bit weaker, but this is the general idea. So I'm starting to believe that the chances are for one more leg to the upside, at least based on this technical formation. I'm still short personally, right? So I mean, because my positions are not like intraday, but that doesn't make me blind to what charts say. So we already mentioned what is happening here with USD CAD, USD NOK, Euro NOK, since conversation came to that. Now, having to do with, let's go to the basics, meaning the dollar index. I had already said that I expect at least one more leg to the upside. If you want to see it on the 4-hour chart as well, here's the DXY. There it is. So here's the DXY. Looks to me like we are probably gonna be seeing one more leg higher. Might even happen today, right? That's the minimum case scenario, in my opinion, because we might see a lot more strength, but you start with minimum expectations, which is for a corrective rebound, and of course, you might get a lot more than a corrective rebound. So, having seen that, it's not weird that we're seeing this weakness in the pound. Now, the previous move in the pound higher, I have to admit that it was somewhat impulsive. So it's not that I'm turning bearish the pound, and it's not that I'm turning bearish the Euro USD, because Euro USD, Blake already showed it. There are two scenarios here. Scenario number one is that this is a head and shoulders formation. Now, Blake yesterday, but I didn't want to interrupt, he mentioned that he, doesn't follow head and shoulders formations targets so closely because they're notorious for failing. And I've explained that on the webinar in the past. The main reason that head and shoulder formations are notorious for failing is because they get mischaracterized as such. Because look at this. The same formation that somebody can read as a head and shoulders formation, somebody that is looking the chart from a bullish perspective can just call it a bullish pennant. So as you see, until you get a confirmed break below the neckline, the same formation that can be a bearish reversal formation can very easily be a bullish continuation formation. So you can see this. I mean, which of the two is the question? My gut feeling tells me that there's going to be more strength coming in the Euro USD. And, if it first breaks through the neckline a little bit, and gets to the bottom of that pennant, even better, because it's going to trap a lot of people shorting it once again, and then it's going to move higher. Levels to watch: 110.50, sorry, 111.50, I mean, then 110.90, 110. I doubt it that we're going to see below 110 before we see more strength. So I think a little bit more weakness is likely. But it's also extremely likely that that's going to be followed by another leg higher. So I think Euro USD dips should probably be bought. Now, pound is under pressure today. Euro is not doing that bad. And the reason I mentioned this is because of Euro pound. So if you remember, we were talking about the Euro pound and the Euro pound being in a second rectangle. So keep in mind, Euro pound is testing resistance once again. If we do break through this resistance, then look higher towards 92 cents, because I think then we can extend to retest these ascending channels trendline resistance. So, a daily close above, like, what is it, 90.20 can take us to 92. Most likely it will. Now, no need to go back to say the usual. Aussie USD, Aussie yen, Kiwi yen, you see very similar. One leg lower, what seems to be consolidations to me. Logic says that they will resume to the downside, but all of them are testing one type of support or another. So, it's all going to be based on what happens here from stocks. So everything comes back to this triangle, to this little triangle, because this little triangle is going to determine the fate of both stocks and FX, since the vast majority of FX pairs are, more or less strongly correlated to risk on, risk off, especially after we saw all these interventions, etc. That, these correlations actually tightened due to the recent mania with monetary policy and interventions. Now we have questions about crude and natural gas. So I said it yesterday, I said it before yesterday, and it remains the case still. The fate of crude, meaning when it's actually going to pull back, because from a risk reward perspective, as we said, crude should not be looked upon as a thing you should be buying at current levels, right? So in my opinion, we've already run, a huge recovery, which in the short term seems to be somewhat fatigued. So the only question is, where does it pull back from? Is it going to be here? It's the third day that we're testing this horizontal support resistance area, or is it going to be from a little bit higher? Meaning $40, it's the 161.8 extension of that last leg lower. It is also a psychological level, right? It's a round number, $40. So, it's all about waiting for a pullback and looking at interesting levels to buy that pullback. For me, before we even start seeing this pullback, $29 is such an area. Now, having to do with natural gas is at an area that produces a decent buying opportunity from a risk-reward perspective. If you remember, we've mentioned since some time ago that natural gas is consolidating in this rather large range that extends from $1.50 to $2. I've said many times that it's not impossible to see a breakdown from support. So it's not impossible to see it plunge below the $1.50 area. But if that happens, in my opinion, it's going to be short-lived. So I'm not looking to either buy a breakout or sell a breakdown, because I don't want to be selling a breakdown, because I think it can last for very, very few days and then see a reversal. I think that the better opportunity is either buying close to $1.50, which might hold once again, or buy if you want to be, on the safe side. If you want to take less risks, of course, you reduce your potential reward, but you increase the likelihood that you're in the right side of the market. Is buying an eventual, because it's going to eventually happen, breakout from the $2 area. So, these are the viable trades, from my personal perspective, of course. Niraj is asking for zinc. He asked for it the other day. He's also giving me a ticker. Zinc futures. Okay, perfect. It works. So let's open it up here where I have commodities. Yeah, zinc doesn't look that healthy. I can tell you that much, right? I mean, okay, so longer term picture is this. There is even a good argument to be made that this was a massive head and shoulders formation. So problem number one is this. Problem number two is compare the nature of the moves lower with the recovery higher. Right? Just zoom out and look at them. Bottom line, this looks like a corrective move to me. And I think it is probably going to fail sooner rather than later. So that's what I think about zinc. Now, as long as this channel is holding, nobody says that we can't keep seeing moves like that before we fail, right? So, this trend line support is going to be your indicator in essence. As long as it's holding, you can play it to the long side, because, corrections can often be long lasting and complex. But you don't want to be long this thing once it breaks through this trend line support, because the overall trend points lower. Okay. Now let me go through some of the rest of the questions. Can you please comment on the FTSE 100? Yeah, absolutely. Although, as I said, once you have a look at the S&P, you get a good idea for the rest. But here's the FTSE. Now we can perhaps redraw it a little bit. More or less what I said before about zinc, not the same, not the same situation, not exactly the same situation. but the general idea is equivalent. We've had quite an impulsive move lower, and the rebound higher looks corrective to me. So I would expect that this has a high chance of failing to the downside. Now, if we're lucky and we see a test of the 61.8, even better. The risk reward is going to be great. Can you also please review the Dow 30? Could you please analyze RNO and EDF? Okay, Dimitri, no problem. Just give me the context. What is RNO and EDF? Question about Euro NOK. We did have a look at Euro NOK. Here it is. I said that we had a beautiful rejection from this 11 area. So, as long as we are below it, we remain under pressure. Now, can't exclude something like this, right? Another leg higher. But in any case, I think that this was a blow off top. Euro NOK rebounds should be sold. Same with USD NOK. I'm really in favor of owning having to do with fiat currencies, the Norwegian kroner. Renault and French Day. Oh, yeah, EDF. Yeah, I know because I had to analyze it for a friend of mine some time ago. He was, I just kept forgetting. Yeah, a friend of mine some time ago, he was, he was really pressuring me about EDF, telling me that it's an amazing opportunity because it's like not going bankrupt and it's extremely oversold. It was near the lows, to be fair and honest, but on the other hand, too soon to tell what kind of a correction we have because it might unfold to something different. But I have to tell you that given the impulsive nature lower, this formation so far looks purely corrective to me. So I would be extremely careful, especially if you see a breakdown from this trend line. I don't know if we're going to see new lows, but a retest of that spike low at 3.5 euros, very, very likely. Now, having to do with Renault, let me find the ticker. I don't know. Yeah, that is definitely somewhat more interesting. Whoop. That was my cut. Back to the chart. So okay, we have an initial bullish reversal here for sure. Now I say initial because we definitely need to, we need to move over a few more levels to have a more confirmed reversal. Yeah, I would have to say that this rebound can extend. Let me also measure equality. So low, high, low. Yeah, let's see what happens from here. But if this level seems to hold, I think we can extend towards 16.8 initially. So it doesn't look that bad for a squeeze higher, even if it is to move lower later on. Now, an eventual breakout from this trend line is going to be needed to, talk about like a big bullish reversal, right? So there is a lot to be done until we can, talk about like a real change on the chart. But for the time being, it seems to be squeezing quite nicely. Renault, okay. Okay, more questions. Most famous investors are on the sidelines or very light. That is very true. Retail is buying bankrupt companies. That is also unfortunately very true. This time will be different with a smile. Yeah, this time won't be different. The end is going to be the same. Now, timing that end is not easy because, you know, the market can remain stupid for much longer than you can remain solvent, especially when you have all central banks, in essence, throwing fuel to the fire. But yeah, the end is going to be inescapable and is going to be what, you know, everybody knows is going to be. Anybody that's been in the market for a few you know, cycles, or that has read a little bit of history of the financial markets. Now, to finish up, do we have an interview, Dale?
I'm going to page Brian from @QuantFiction. If you could give me a message in the chat so I could find you. Saw Brian in here earlier, but not right now, Steve. So it's
Okay.
possible. Yeah, I'd call it 50-50.
Okay.
Like trading.
And here's the nifty that our friend is asking for, still following this recovery path beautifully. That's why I've told you, by the way, many times that corrections, this is a good history, actually. I mean, this is a good lesson having to do with the history of this chart. Did you find your guest? Why are we playing music?
No, I just, you know, keeps me relaxed.
Okay, so
you never heard
now,
of the guitar playing trader?
So now look at the history of this chart, right? Look at the history of this chart. We got this impulsive move lower, and then we started creating this pennant. So, you know, it made sense to believe that the breakdown from this pennant would produce new lows. And then price action makes you realize that this pennant was just part of a larger pennant. That's why I keep saying again and again that be careful with, because, you know, corrective moves can be complex and it's extremely hard to predict since the beginning how they're going to look in the end. So, you know, once we saw that the price action after reversing lower was not impulsive in nature, it was natural to expect that, you know, something else is happening here. And now we have a much better idea. And so far, this looks like a much larger recovery, but still in a manner that is clearly looking corrective. So, you know, another push higher towards 10,500 is going to be great, because that's both a horizontal support resistance area and the 61.8% fib. So I think that's going to produce a very nice risk reward opportunity for somebody to be short the Nifty and look lower. Spain, IBEX. Yeah, you know, all these indexes look really bad because, you know, here it is, right? A very long-term corrective move in a large triangle, an impulsive break through the triangle, and so far a recovery that more or less looks corrective to me. Let's redraw it a little bit now that we have the support areas better defined. There you go. And don't forget,
looks like a bullfight to me, man. And the market got gored.
And don't forget that you live in this market, right?
Yeah.
This market. I remind you, this is a company that has produced 0 vehicles in its history. It's a company that will be producing electric trucks.
Maybe.
Maybe. Today there were news about it that the owner might have exaggerated, you know, the potential of the first. Yeah.
That's
vehicle.
not nice. Yeah.
Yeah. So, you know, irrespective of that, it's well loved by, guess who? Robin Hooders, right? Because they're looking at Tesla and they're like, okay, why can't Nikola go to 1,000? And
yeah,
you
if
know,
his last name did, why not his first name?
Yeah, exactly. Too bad Nikola Tesla didn't have a middle name, because we could have created the third.
We could do an IPO.
Bubble company out of it, right?
Yeah. Yeah.
Okay. Yeah, Paul says Robin Hood and lots of merry men out there, indeed. Okay, so Dale, any news, any luck with your guest?
Going one more time, Brian, are you around? It's an opportunity to speak to hundreds of people and have them, know where to find you, your website. Bueller, are you there? No, so it looks like no. So why don't I just give people one reminder when they're trading, especially S&Ps, Steve? Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. And remember, don't just count your
pips, count your
Yeah,
blessings.
that's right. So we'll see everyone to wrap up the week tomorrow. See you in chat. Consider becoming part of our community. I teach surround yourself with traders better than you. And it's not a theory. It worked. I'd say the last 3 years being around Steve and Blake and Grega and all the guys has actually made me a decent trader. So give it a shot. It works. So you rise to the level of people you're hanging with. So that's my pitch. And
Have a wonderful day, everybody.
You too, Steve. Good job. Catch you later on, buddy.
Bye-bye.
We're amazing, Ona said.
Thank you.
Wow. All right.
Bye.
All right. Bye.